Hi all, good Sunday evening. I'm filming this on a Sunday night. As always, welcome to Erebus Trading Weekly Stock Market Update. I just finished screening through this setup and let's get right into it. So firstly, on key news update, CPI came in at 3.8% higher since May 2023 and well above the forecast of 3.6%, I believe. So actually, this brings in expectation of a rate hike with a 25 basis point hike in Jan 2027. And rate hike is generally bearish for the equity market because it actually tightens liquidity in the market in general. In another news, PPI jumped 6% year on year. So this is driven by rising margins for final demand trade services, transportation, warehousing costs, and of course, a surge in energy prices amid the Iran war, as we all have expected. Next, new Fed Chair Kevin Walsh has officially took over Jerome Powell. So for those of you that don't know, this new Fed Chair Kevin Walsh, he's actually a very dovish guy in terms of he's actually calling for rate cuts, right? But his strategy to combat inflation is actually something that hasn't been tried before, or perhaps hasn't been tried in a long time, and that is to shed balance sheet of the it's actually shed the Fed's balance sheet. So how he's doing it is by selling some of the assets the Fed currently own to the public. So by selling such assets, he's actually receiving cash or rather liquidity from the public and thereby tightening the market. But he actually uses this to combat inflation, but he will look to lower interest rate. So these are actually two conflicting approach. Whether he will be successful or not, there are a lot of debates going on, but we do not know, right? So next, moving on to the equities market, we are currently in greed territory. My suggestion is, as always, is to hold on to your existing longs. Don't blindly go for longs now. If you want to go for longs, then watch out for the appropriate sector, right? Which I'll go through it later. Straits of Hormuz effectively stay shut despite ceasefire, but as mentioned always, equity market now simply just doesn't care. Latest piece of update is that China actually pledged not to provide military equipment to Iran after latest Trump-Xi meetings or summit, they'll call it. Yes, there has been news whereby there are more vessels passing through, but the amount passing through has been a fraction of what it has been during compared to pre-war times. So for simplicity's sake, Straits of Hormuz effectively is still closed. For those that are interested, UAE is continuing its Milk Run initiative, though albeit at a lower volume, I suppose. Yep. Next, I'm going through some of the key macro indicators. As usual, I'll be going through Nasdaq, VIX, Bitcoin, and then Brent. Okay, so starting with the first one, we have Nasdaq. Let's go. Okay, it's currently with the Nasdaq. So this is the daily chart of the Nasdaq. So you can see that after this phenomenal rise, price has started to pull back, right? And my prediction for price would be, I do not think price is gonna crash straight down, but I do think it's gonna hover at current price level for a while. So what I do think is the most likely, what likely is gonna happen is price is gonna do something like this, right? Before it goes up or down. No one knows, right? But this is my prediction for price. I do not think it's gonna go straight down, and perhaps it might still have a few dying legs up. So that's possible as well, right? Next, moving on to the VIX. In my previous few videos, I have been calling out this demand zone as a potential place for bounce. But price has actually bounced higher. Which resulted in a slight market sell-off, but it didn't tap my demand zone. I do still expect that it will come tap and then rally higher. But there exists the possibility whereby it doesn't tap and then just rally, right? So if this scenario play out whereby it just rally, then more sell-off will be coming. If this scenario play out whereby it make a further move down before rallying, then you can see the equity market making new highs before selling off again, right? If you see, bring back to these instances whereby price actually didn't tap this demand zone and then went back up, hover a bit before coming back down and eventually tapping it. Okay, so I think both scenario, I'm not sure which one is more likely, but I think we just have to be cognizant of it. So next, after the big VIX, let's take a look at Bitcoin. Um, I think when I first made a video on Bitcoin, it was during this period, and I mentioned that it should at least meet tap the red box before facing some sort of resistance, right? So now it tapped the red box and it's starting to sell off. Let's take a look at slightly lower time frame. I do think that it can still hit higher, but it should hover in this range for say maybe the next 1-2 days before it go higher. So my take is it still can go higher, but I think another thing we have to look out for is the VIX, right? If let's say the VIX tap and then rally, then you see equity sell off, or rather you see risk on asset sell off, and that includes Bitcoin, right? So you have to be cognizant of this. But I do think that it can go higher to take this high, which is at about 82.7. Yes. Okay, lastly, the last one thing I want to go through is Brent. So last week I pointed out that Brent is currently at demand. This is where the bounce happened, but if this zone fail, it will break, right? Now it seems like Brent has bounced off, and it seems like the making another leg up to take out the liquidity of these three highs seems really possible now. So my take is coming up to actually take this high and then sell back down. I think that's very possible, right?